Hi friends, this is Suresh. Welcome to my Lakshmi Securities YouTube channel. I know very well you are searching a good stock to invest right now as long-term investment to get high return. Here I have a good stock for you. Keep watching this video till end. Before see the stock, please go through the disclaimers. So the best stock is HCL Technologies. We all know that this stock will be coming under IT sector and it is one of the leading software company in the globe. Now the question is, how can we say this stock is good for investment right now? To get clear picture about the stock, we are going to see all the fundamental and technical aspects of the stock one by one. Let's start from fundamental aspects. In fundamental analysis, we are going to see following the parameters which will affect the stock significantly. Here I mentioned the expectation level for each parameters. It could be considered good for this stock. Out of 14 parameters, the stock need to meet maximum number of requirement. Let's start. First, market capitalization. This stock market capitalization is 2,83,000 crore. So it is one of the large cap company. I'm always prefer large cap company for investment purpose because they are capable for manage any crisis in the market. Second, net income of the company. In the year of 2022, the income was 86,000 crore. But previous year, I mean in the year of 2021, the income was 76,000 crore, which means the income is drastically increased. So we come to know that the companies keep on increasing. It is good for stock. Third, profit and loss for the period. If you look at the company P&L, 13,500 crore in the year of 2022, but previous year 11,000 crore. So the P&L also keep on increasing. It is also good for the company. Fourth, current ratio. The current ratio for the company is 2.56, which means the company has the asset 2.56 times higher than the liability. Our expectation level is 1.222. So we come to know that the company has sufficient financial background. Fifth, quick ratio. The quick ratio for the company is 2.55, which means the company has sufficient fund for short-term investment and other expenses. Our expectation level is more than 1. It is also good for the company. Sixth, debt to equity ratio. For any company, the debt to equity ratio should be less than 1. For this company, the debt to equity ratio is 0.06. So the point here is the company has very less debt. Seventh, return on equity. The return on equity for the company is 21.80% as against the expectation of 15 to 20%. Now we can understand that the company has been earning good revenue through investment. It is also good for the company. Eighth, return on asset. In this company, the return on asset is 15.16%. Our expectation is it should be more than 5%, which means the company earn good revenue by using their asset. It is also good for our requirement. Ninth, price to earning ratio. The PE ratio for the company is 20.47. Our expectation is the stock PE ratio should be more than the industry PE. Here the industry PE is 29.15. So it is less than the industry PE. It is not meeting our requirement. 10th, price to sales ratio. In this company, the price to sales ratio is 3.69, but our expectation level of the price to sales ratio is less than 2, which means the company did not grow according to the sales of the company, but it is not that much of significant difference. 11th, price to book ratio. For this company, the price to book ratio is 4.56 as against the expectation of 1 to 3. Anyhow, the company is related to IT sector, so we can neglect this parameter. 12th, dividend yield. The company dividend yield is 4.06, but our expectation is the dividend should be more than 1. Here the company giving very good dividend to the customer. It is also good for the company. 13th, EBITDA. The EBITDA for the company is 27.82. So we come to know that the company income is keep on increasing before tax. 14th, management holding and pledging. The management hold 60.33% of the shares in the company and there is no pledge. In this data, only three parameters are not meeting our requirement, but it is not a significant variation. So we can consider this stock very strong in fundamental aspects. Next, we will see technical aspects. In technical analysis, we are going to see the entry and exit level of the stock as well as the targets. I am always using MACD and RSI indicator for the technical analysis. So the current market price of the company is 1044. The RSI value is 46. So the stock is not in overbought zone and MACD shows near to crossover. So the conclusion is that this is the right time for entry and you can follow the pivot levels for the target. As of now, we have seen all the fundamental and technical aspects of the HCL technologies. Based on my experience, I performed this analysis. So before investing in this stock, please discuss with your financial advisor to get more confident. We always remember the rule of Warren Buffett. The rule number one is don't lose money, and the rule number two is don't forget the rule number one. Keep in mind before investing in the stock market. Learn more, gain more. Thank you.